Hello everyone. Today we are going to quickly revise important topics in national income. Now, what is the difference between microeconomics and macroeconomics? Micro studies individual income, whereas macro studies national income. Microeconomic analyzes demand and supply of labor, whereas macro analyzes the total employment in an economy. Micro deals with household and the firms, whereas macro deals with aggregate decisions. Microeconomic studies only individual prices, whereas macro studies overall price level. Inflation, unemployment are the topics which have been studied under macroeconomics. Microeconomics analyzes demand and supply of a good, whereas macro analyzes aggregate demand and aggregate supply. The other name for microeconomics is price theory, whereas macro is also known as theory of income and employment. Now, what is the difference between stock and flow? It is an economic variable which can be measured at a point of time, whereas flow is an economic variable which can be measured at a period of time. At a particular point of time, what we represent is stock, and period of time is flow. Stocks examples are population, water in the reservoir, goods in the warehouse, whereas flow variables are national income, water in and river, sales, etc. Stock has no dimension, whereas flow has dimensions like per day, per hour, per month, per year. Then stock is a static concept, whereas flow is an dynamic concept. Now, what is circular flow of income? It refers to continuous flow of goods and services and money income among different sectors in an economy. It is circular in nature. It has neither an end nor a beginning point. It helps to know functioning of an economy. In the other words, we can tell that circular flow of an income is the activity of production, income, expenditure involving different sectors of an economy, namely household sector, producer sector, government sector, and rest of the world. Now let us understand two sector economy where you have only household and firms. Now factor services flow from household to sector of producer. Then factor payments are to be made from producer to the household in the form of rent, wage, dividend and interest. And the final goods and services flow from producer to then household sector, whereas final consumption expenditure or consumer expenditure is made on goods and services by household. That is in case of two sector economy. When I talk about three sector, it is government, and when I talk about four, it involves even the transactions dealt with rest of the world. Now goods. In economics, goods is defined as a physical object man-made that could command a price in the market, and these are the material to satisfy human want and provide utility. Goods can be physical, you can touch and you can consume also. Then it can be further classified into consumption goods. Consumption goods are those final goods which satisfy human want directly. Example is ice cream, milk, bread, which is used by an household. What are capital goods? Those are the goods, final goods, which helped in production. These goods are used for generating income. These goods are fixed assets of the producer. That is, example is plant, machinery, computers. These are the capital goods. Now what are final goods? Final goods are those goods which are used either for final consumption or for investment. Now investment again can be classified into two parts, that is gross investment and net investment. What is gross investment? It is the total addition made to physical stock of capital during a period of time. It includes depreciation. That is, to calculate gross investment, the formula is, that is net investment plus depreciation. Now what is net investment? Net addition made to the real stock of the capital during a period of time. It excludes depreciation. Net investment equals gross investment less depreciation. Depreciation is the wear and tear of an asset. It is known cash effect as well. Now two concepts you should understand: what is leakage and injection. What is leakage? It is the amount of money which is withdrawn from a circular flow of income. Example: taxes, saving, import. It reduces aggregate demand and the level of the economy. Whereas injection, it is the amount of money which is added to a circular flow of income. For example, government expenditure, investment and exports. It will increase the aggregate demand and the level of income. Now there are certain short questions asked in 3 or 4 marks. State the 4 components of macroeconomics. What do you mean by macroeconomics? What is the difference between partial equilibrium and general equilibrium? State any 4 difference between microeconomics and macroeconomics. Give to illustration of interdependence between microeconomics and macroeconomics. Both are independent, they both have to work, and in order to know the price level, you need to understand the microeconomics, and you need to understand employment theory in order to fix your price. Some more questions. Discuss the concept of stock and flow, and why is national income a flow concept? Explain the circular flow of income. Over here you are going to explain with only two sector. In a two sector economy without financial market, the final consumption and expenditure by household is equal to the factor income received by them. Defend and refute. What is meant by circular flow of income? Distinguish between real flow and money flow. Real flow is like barter system, when goods are exchanged with goods, and money flow is it has been exchanged with the help of money. Now what are the different phases of circular flow of income? Household and firms depend on each other in a circular flow of income. Justify this statement in case of two sector economy. Differentiate between leakage and injection. Give two examples of each. Distinguish between stock and flow. Give two examples of each. Give reason. Categorize the following into stock of flow. You need to either tell them whether it is stock and flow. If stock, please explain with reason. If flow, explain with reason. Number 1, capital. Number 2, saving. Number 3, gross domestic product. And number 4 is wealth. You can refer earlier notes, PDF sent or NCERT textbooks to answer this questions. Thank you.